a conversation about autoimmune diseases and why biotechs don't pay a dividend, because this is where the money is. Hey fools, healthcare analyst Michael Douglas here with our healthcare contributor Todd Campbell, all the way from New Hampshire. Todd, how's it going?
It's going well. I'm getting really excited about the apple pie tomorrow. How about you?
Yeah, blueberry and coconut cream, I think, is what's really high on my list. And as we discussed beforehand, will probably be my breakfast the next morning, and if I can make it happen, the morning after. I guess Thanksgiving hacks for everyone to get the maximum amount of sugar and bad food. Definitely looking forward to that. Hope everyone, by the way, has a fantastic Thanksgiving. All right, but we've got before we can have our desserts, let's get into some important investing stuff. We're going to start off with a conversation about an autoimmune disease drug called Stelara. But before we get into that, I want to sort of talk a little bit about what the problems and pitfalls for a drug are. So when you have a drug that comes that is being tested, the first question is safety, right? Is the drug safe? Because if it causes liver failure or heart attacks, chances are pretty good it's not going to be approved, right? The second thing is, does it actually work? Right, so when we look at a lot of Alzheimer's disease drugs that have been, some of the BACE inhibitors that have come out in the last few years, they have just not been effective. They've been perfectly safe, but not effective. And so those are two things you really have to watch. And the third is whether a drug is then commercially successful, whether there's the money behind it, the marketing team, the experienced sales team behind it to really make it a success. Stelara has been fine in those first three, but now it's facing kind of the fourth problem. Competition. But first off, let's talk about what a success Stelara has been. Todd?
Well, this has been a big drug for Johnson & Johnson. It's used to treat psoriasis, and psoriasis is a pretty big indication. It affects a lot of people. I mean, there's over 1 million people here in the U.S. There's a couple million people in Europe that use these drugs, rely on these drugs to improve their symptoms. And Stelara has done a very good job at winning away market share from drugs like Enbrel and Humira. As a result, Johnson is racking up some pretty substantial sales. Sales in the third quarter for the drug were about $540 million, which gives it a $2 billion a year run rate, and that was up 47% year over year.
Yeah, no, it's big numbers for Stelara, and as you pointed out, psoriasis affects, I think, about 3% of the world population, around 125 million people worldwide. So when you're thinking about really big diseases, psoriasis is up there. Hepatitis C is, kind of in the 150 to 180 million people range, more or less, depending on the estimate. These are, your really big diseases, your really big indications. The opportunity for a drug to really help a large number of people. But okay, so Stelara, successful. Naturally, it's going to start getting competitors, just like Humira, which was last year the #1 selling drug in the world, in part because of this psoriasis indication that Stelara is fighting it on, attracted competitors like Stelara. So a number of competitors. We've got Novartis, Johnson & Johnson has a follow-up drug that they're working on. Amgen's coming out with brodalumab. Which of these competitors should investors really be most concerned about when they're thinking about Stelara's opportunity to continue holding on to and perhaps gaining market share?
Yeah, that's a great question. It's going to be a very interesting battleground over the next 2 years to see how this shakes out. It's funny, all of these companies are saying, hey, we have $1 billion drug. This is going to be $1 billion drug. Amgen has said it, Novartis has said it, and Celgene has said it. So they both have expectations, all three of them have expectations that their drugs are going to be blockbusters. Whether or not that plays out remains to be seen. I mean, Stelara has Johnson & Johnson in its corner, and Johnson & Johnson has a massive marketing machine. I mean, they have the relationships. It's going to be hard to win those doctors over. That being said, the closest competitor that could challenge them is Novartis. Novartis has a drug coming, it's Cosentyx, and Cosentyx has shown very strong efficacy, solid safety during trials. It's already in front of the FDA. The FDA's advisory committee did give it a unanimous nod for approval, and that clears the way for a decision in January from the FDA. So that one will come first. And then behind that will be Amgen's drug. Now, Amgen just reported head-to-head results against Stelara that were pretty impressive. And those results may mean that it stands the best chance of directly cutting into Stelara's market share and winning away that money.
Yeah, well, and you bring up a really good point here, Todd, which is that it's difficult a lot of the time to figure out whether one drug is going to be better than another drug, because there are always differences in clinical trial design. We always have to be really, really careful about sort of looking at the population and what exactly it's being tested for and what the efficacy measures are when we're comparing across trials. It's very difficult to do. However, with brodalumab, which is Amgen's drug, they did a head-to-head. They said, we're going to, same population, brodalumab versus Stelara, which is better? And they showed brodalumab was. And this is, I think, their second phase 3 clinical trial, which is those big ones that really showed that. So really, really good news for Amgen there.
Yeah, they've had, I think this was actually the third, and second most recently announced. So it's probably likely that we'll see a filing for approval of this drug within the next 3 to 6 months.
Yeah.
So it'll be very interesting to see how that shakes out. In the head-to-head, as far as results, I think Stelara cleared, reduced symptoms by at least 75% in about 69% of patients. But Amgen's drug did better. I mean, it was 80%ish.
Yeah, so definitely something to watch, and again, we know that healthcare can be like really complicated, and really you have to really get into the details to really understand what's going on, and that's really one of the benefits of foolish investing. Is if you really do your research, you will hopefully understand more than what a lot of the market is looking at with these, and that's sort of, to my mind, an opportunity to exploit sort of inefficiencies in healthcare investing, where people are overreacting to data because they haven't really understood what's going on yet.
Right.
Yeah.
Right. Absolutely. Absolutely. I mean, biotech is not an easy subject for people to get their arms around. And biotech investing, isn't going to work for everyone. Dividend investors, for example,
right,
oftentimes struggle to find something that they can invest in the space.
Well, yeah, in part because, I mean, let's face it, nice segue. You beat me on my own segue into our second part, which is why biotechs don't pay dividends. Amgen is the only biotech that pays a dividend.
Yes. Yeah, and it's not a very big one.
No, it's like, what, 1.5%, 2 maybe?
I think it's like 1.3. I don't know.
Wow.
Yeah, and the stock has been rallying, so the yield has been dropping. Yeah, I mean, biotech companies are growth companies, and you know as well as I do, management has to make a decision. They have to either take their profits and return them to shareholders through dividends and buybacks, or take those profits and use them for research and development or acquisitions. And biotech is an area where oftentimes the management decides, hey, it's better to put that money back into R&D or go out and buy a company that has emerging technology instead.
Well, and I'll tell you, I mean, for me, I certainly invest in some dividend stocks. I mean, Johnson & Johnson, for example, is one I'm invested in. But to my mind, a dividend to some extent is kind of management's acknowledgement that, well, there isn't a better place for us to deploy our cash right now. And that does raise some questions, especially in a space like biotech, where you have lots of exciting new therapies that really could be big. Now, of course, it's difficult to move the needle for a big company, a Johnson & Johnson, a Bristol-Myers Squibb, an Eli Lilly. But when you're thinking about your smaller companies, your big biotechs, for example, like Celgene, which I'm also a shareholder of, and some of your mid and small caps, it's like, well, if you're getting all this cash, maybe it's time to try and find the next big, the next Otezla for Celgene, or the next Stelara, or the next, brodalumab.
Yeah, it's going to be frustrating to some extent for people who like dividends.
Yeah.
Because they're looking at it, they're saying, wow, these companies are generating out billions of dollars in revenue off of these drugs, and their margins are 50%, 60%. Why aren't they sending some of that money back?
Yeah.
But the reality is that drugs also have a limited shelf life, in that patent protection only lasts so long. They have to continually make these investments back into their franchise if they hope to continue to grow over time. Gilead is a great example, because you simply look at that and you say, well, why didn't they take the money from their HIV franchise in the 2000s and give that back to investors in the form of a dividend? Well, instead, they ended up buying Pharma Asset for $11 billion in 2012, and that's how they got Sovaldi.
Yeah, well, it was funny about that, of course, everyone's like, oh my gosh, pharma said, 11 billion, that seems like a lot of money. Well, Sovaldi's generated what, just under 9 billion in its first 3 full quarters on the market. I mean, Gilead is coming off smelling like roses here. This is exactly the right call by them. And when you think about how much shareholder value that can generate long term, it's enormous. And especially when, with Harvoni now coming online, which is their sort of next version of Sovaldi, that's cleared for all oral interferon free for hepatitis type 1 patients, hepatitis C type 1 patients. And then, their opportunity to build out their cancer franchise, to reinvest in that HIV franchise. I mean, it's that sort of thing that's like, okay, maybe a dividend doesn't make as much sense when there's so much opportunity for growth still.
Yeah, absolutely. And I think that biotech investors are probably going to have to look at it and say, these are growth stories. They're a little bit more speculative. And as a result, I'm not going to get that dividend payout. And if I want that dividend payout, I'm probably going to have to focus more on pharmaceutical companies like Johnson & Johnson.
Yeah, exactly. So, I mean, it certainly makes sense as part of a balanced investment strategy. I mean, I would never advocate for biotech to be the majority of someone's portfolio unless they really understand the science and are very confident in their investing. And even then, I would say, oh gosh, that seems like a little much. I do tend to be kind of a mixed investor. I tend to like my combination of sort of drier income plays and then strong growth stories. But I think when you're looking for that growth opportunity, there is really some option there for just incredible growth. Gilead and Celgene just being 2 big examples.
Yeah, absolutely, absolutely.
All right, cool. Todd, thank you as always for your 2 cents. This is really helpful. I hope it's helpful for everyone. Folks, if you ever have any questions, please email us at hc@fool.com. That's HC as in healthcare @fool.com. We're happy to answer any questions, have guests on the show, anything like that. Also, hope you all have a great Thanksgiving. Check back to fool.com for all your investing needs, and Fool on.